So good afternoon. We'll be starting up in a couple of minutes. We're trying to make sure we get a password out to those who need it. So we may be a minute or two after 2 o'clock before we actually start.
Hey, Dave, I'm only seeing you right now. Is there something going on?
You should only see myself, maybe Tim, and yourself, depending on which way you've got things set up.
No, don't even see Tim or me.
Well, you might have it in speaker view up in the upper right. You can have speaker view or gallery view. I know it's 2 o'clock, but we're going to give about a minute. There were some folks trying to get the password, so we're emailing that out. So we're going to be about another minute or so before we actually start with this afternoon's Budget Basics webinar. Okay, we're going to go ahead and get started. I'm going to give you some preliminaries, so it'll take us a minute or two, and then hopefully the folks can sign in and get in with their password. So I see a lot of people have gotten in successfully, so that's good. So my name is David Orr. I'm the director here at the Cornell Local Roads program, and I want to welcome you to our Thursday afternoon webinar. Today's webinar is going to be on budget basics with Tim Hunt and Guy James. Tim Hunt was formerly with the town of Cazenovia. How many years were you with town, Tim?
12 years.
12 years. And then Guy James was with Allegheny County when they had steamrollers and dinosaurs. Flintstone, right, Guy? How long were you with the county, Guy?
Yeah. 30 years.
30 years. Okay, cool. So before the two of them get started, just a couple of preliminaries. We're not going to show a slide on it today. Chat has been disabled if you're wondering about that, but we are taking your questions in the Q&A pod, so please type them in and we'll try to answer those. I'll break in if it looks like it's really salient, important to talk about right then. Otherwise, we'll catch them at the end of the talk. And then if you stay on for 3/4, there will be a certificate sent to you after the session is over. And for those wondering, today's session is not eligible for PDHs, just so you're wondering. Okay, and with that, I'm going to go ahead and let the two of you get started, and I'm going to turn off my video feed just to save a little bandwidth. It's all yours, gentlemen.
Great. Thank you, David. As David mentioned, I'm Tim Hunt. I was the highway superintendent in the town of Cazenovia for 12 years. I was on the town board and town supervisor as well. So I've done quite a few of these budgets and thought we'd run over some basics to try to get everybody up to speed, especially in this challenging time. We know that it's an uncertain world right now, so the budget's going to be impacted, and we want to make sure that we kind of go back to some of the basics. First of all, start early. For the towns, the villages and counties have a little different schedule, but for the towns, you're going to have to get your budget numbers in August, and it's never too early to start that. In fact, a lot of your estimates for next year, you should probably already be working on. But starting now, thinking about the fact that in August, you're going to have budget numbers to your elected officials is really important. The sooner you can do it, the better the conversation with your elected officials. Be prepared and know the facts. So it's not enough to just present some numbers to them, some budget estimates. Understand the budget, understand what the the elected officials are going through, and make sure that you really know what those numbers are so that you can talk intelligently with them. My recommendation is that you collaborate. It's not enough to just walk in, and this is a mistake we all make. I've made it before, is you come in August and you present the numbers that you want, and you've not really involved them. You haven't got their input. You haven't involved them in that process, and it's easier for them to say no or to shoot you down. So try to collaborate with them early, and then try to communicate. Communication, especially now in this time of uncertainty, is very, very important. So real quick poll question. How many of you seen financial impacts in this budget year? And how many of you anticipate business as usual next year? So I grabbed a few headlines that have been out there throughout New York State. COVID-19 could create a $20 million revenue gap for the town of Amherst. Probably something we're all facing. We've all been having conversations with our elected officials about what they anticipate their revenue shortfalls to be because of the COVID. This one, 20 million, is pretty significant, and I would anticipate that it will impact capital purchases and capital construction projects. Messina delays filling positions as state funding revenue decreases. So we're also seeing labor impacted because of the revenue shortfalls. And the third headline, CPA, this is the town of Batavia, deemed financially fit to take on pandemic-related decrease in revenue. So here's one where the town sees no problem, they're going to be able to manage it. One where they're looking at labor, and one where they're looking at capital projects. So my question is, what has your biggest impact been? A reduction in capital equipment spending, a reduction in capital project spending, or a reduction in labor?
And we don't have a poll question we're going to bring up to folks, so just type your answer in the Q&A pod.
Okay. Thank you. Gather the facts and perceptions. You need to understand your elected officials' concerns before you start the process, even if they are not valid. We often know. Yep, go ahead, David.
Just so you know, most people said project and labor or all three. Okay. A couple did say equipment as well.
Project and labor, all three. Okay, great. So you need to understand what the concerns are that your elected officials have. I called my town supervisor and asked him what his concerns were, and he was concerned about revenue. And I said, what specifically, and this is the next point, is ask, it's not enough that they're concerned about revenue, but where's the shortfall in revenue that they're concerned about, so that you can research it and understand exactly what that impact is going to be on the town budget and on the highway budget. So I asked him, I said, what specifically do you anticipate happening? And his only concern, obviously property taxes should not be impacted, is that sales tax revenue he thought would drop about 20%. So that gave me some very specific information to try to plug in and understand exactly what we're talking about and how I need to prepare a budget for next year to satisfy that concern. Understand that not all concerns are rational, but they still may be valid. So in talking to some of the elected officials, they're concerned about the uncertainty, but they couldn't say anything more than that they were concerned about the uncertainty. So if you can demonstrate that you have a plan and a plan B, if some other concerns become real, that helps them just kind of have faith in the fact that you're there and you can help them with this. So I'm going to start with becoming familiar with your budget. I pulled the budget summary sheet, and I don't know how many of you do this as a regular practice, but I would strongly recommend that every year you get your town budget, not just your budget for the highway department, but the entire town budget. Make sure you have a copy of it and you understand the budget. So I want to talk about the four main categories. General Fund A and General Fund B, Highway Fund DA, and Highway Fund DB. Now, not all towns will have this. Some will just have a general fund and a highway fund. But in this particular case, there's a village inside the town, and therefore there has to be a budget for town-wide, everyone in the town, and then there's a budget for residents outside of the village. So that's the A and B designation. A is town-wide, B is general outside of the village. And the same with the highway funds, DA, highway, town-wide, that's everyone pays into that. DB is highway outside the village. And the reason for that is that they don't want residents to be double taxed for the same services. So there's different areas of the budget depending on what the activity is going to take place. So if you look at this particular thing, this particular budget summary, what you'll notice is, let me go forward here, is that the total appropriations, and this is the town of Cazenovia, the town that I live in, is $3.3 million this year, right here, less estimated revenue of $1.8 million. So we need to understand where that revenue is coming from so that we can understand what could the potential impacts be to the town. Less appropriated surplus, this is unexpended fund balance from the prior year, and then the amount to be raised with property taxes. For those that do not know, this summary sheet, and actually the entire budget, is created with a spreadsheet. And we have this spreadsheet set up so that any change in any of these numbers will then automatically change the amount to be raised by taxes. And if you take that number and multiply it by your entire assessed value, you come up with your tax rate. So by having that formula in there, every time you change a number, it changes your assessed value, or your rate per thousand of assessed value. And the reason that's important is, as most of us know, elected officials don't like to raise property taxes, and we're locked in by the property tax cap. So everything we do, and in this particular case, I ran the scenario for the town of Cazenovia. $10,000 changes the tax rate, property tax rate per thousand of assessed value by 10 cents. So that's kind of how it plays out. So it's important to understand that. Ordinarily, when we're talking to highway superintendents about preparing their budget for next year, we don't really talk about revenue. We only talk about expenditures, because that's what we do. We take care of expending the money that's given to us by the town. But it's important to understand where the town's revenue comes from, especially in this particular time, because we are probably hearing from all of our elected officials that they're very concerned about decreasing revenue. So where does the town actually raise the money that we as highway superintendents get to spend it? So obviously property taxes, sales tax in some towns, not all towns, but about half the towns in New York State get some sort of sales tax sharing formula from the county. There's mortgage tax. So when somebody takes out a mortgage in your community, there's a percentage of that mortgage that actually comes back to the town as revenue. There's pilot agreements, whether you have windmills or a casino or something of that nature that's been negotiated. And that's very important, because there's towns that rely very heavily on those pilot monies, and there are economic things that can impact that. There's the state aid formula, the CHIPS money, and services for other governments. If we plow roads for the county or the state, we receive revenue in from that. And then, of course, there's another one, miscellaneous, which is money that we receive from zoning fees, dog licenses, marriage licenses. It's usually a small amount, grant money that's a one-time thing, but there's some miscellaneous areas there as well. So I want to kind of show you how that all breaks down using that budget summary that I just showed you from the town of Cazenovia. Highway is a percentage of budget. So if you take DA and DB, total them up, and then divide that by the total expenditures, you come up with a percentage. So in the town of Cazenovia, highway expenditures are 53% of the entire budget, and 47% of the budget is general funds. And the reason this is important is if we start to talk about a decrease in revenue, and the supervisor comes and says, we're going to lose $100,000, given this scenario, it's not fair that the town highway department takes the $100,000 reduction when they're only 53% of the budget. So it gives you some ammunition to have some really good conversation with your board about the impacts and where those impacts should be felt throughout the community. Town of Cazenovia, and this is the revenue distribution and where the revenue comes from, because I wanted to show you where, and if you did this for your particular community, you'd start to see maybe why there's some anxiety. So in our particular case, 32% of the revenue comes from property taxes. 4% is that miscellaneous that we talked about, marriage licenses, dog licenses. 6% of the revenue comes from the CHIPS formula. 4% comes from services for others, that's plowing county roads. They use 13% of the total budget expenditures were from unexpended funds. State aid is less than 1%, and mortgage tax is 4%. So if we anticipate perhaps a decrease maybe in mortgage tax, a decrease in state aid, they're going to have very minimal impacts on the budget. A decrease in sales tax revenue is going to have a very significant impact on this particular budget, but this is very unusual. Most towns do not rely this heavily on sales tax revenue. I just want to look at the question and answer pod real quick and see if there's any questions as we're going along. Nothing that I see.
It's
Okay.
just a question about where can they use permanent improvement monies, blacktopping roads, crushing, paving, things like that. So I think we could cover that when you get to the.
Get done. Okay. So I wanted to show you in this particular scenario why I ran that is sales tax is $1.2 million for the town of Cazenovia. So if we anticipate a 20% reduction in sales tax revenue, which is what my highway or what my supervisor is concerned about, we're talking about a $243,000 reduction in spending next year. Now, if the town highway department is 53% of that, 53% of 243,000 is only $128,000 impact on the highway department. So that helps me in preparing my budget in how am I going to find $128,000 to save. Now, before I go through all that work, I'm going to make some phone calls, communicate with the board, and see if that's what they really want me to do. If you want me to try to find the $128,000, I'm going to offer that up first, because if I don't, I know that when I walk into the budget meeting, they're going to suggest that I take the whole $243,000 worth of impact. So I want to start to arm myself with this and say, hey, I've already met you halfway and done the highway department's share of this so that we start to have good dialogue. It's important that they know that you're part of the team, that you want to help them solve the problem, that you understand you've got to share in the pain, but you shouldn't have to take it all. Let them know that everyone's doing their part, but a reduction in the town budget shouldn't just be in the highway, and now you've got some numbers to back that up. That you want to be part of the solution and that you're actually looking for those areas to help solve that problem, and that you want to be in the know and you want to do what you can to help that. Now, this is an evolving situation. Nobody really knows what the impact's going to be. It's evolving as time goes on. So I'm going to recommend that you communicate at least weekly with your supervisor, with your board, with whoever your elected officials are that are very important for you, so that you don't start down a road that's unnecessary. And you also want them to have some buy-in into the process that you're doing. So you want to give them lots of options. So instead of just saying, this is my budget, say, this is budget plan A, budget plan B, budget plan C. We know that taking $120,000 out of the budget is going to be painful, but you guys are the ones that are going to do it. So you need to share and understand where we're going to take those cuts and how those are going to be, implemented in the highway department. So communicating with your supervisor and board, increase your communication. Whenever you're in a situation like this where it's fluid, nobody really knows what's going on, it's incumbent upon you to really increase your communication with your elected officials. Be in touch with them to the point where anytime there's a new development, you're aware of it and you're involved in it. In our particular case, we have a board of supervisors in this county. So our supervisor sits on the board of supervisors, and he comes back from those meetings once a week, and whatever's going on down there and whatever the other supervisors are telling him becomes his emotion at the time. So it's important to know that. It's important to understand what he's feeling and what we think is going to happen. Reach out to your elected officials and bookkeeper on a very regular basis. Ask them what they need to know. Don't just present a plan, collaborate on it. You want to get them to buy in. If you walk in and say, here's my plan, it's very easy for them to say no. But if you started 2 or 3 months prior and you started asking them, well, how would you like to see this unfold? Would you like to see a reduction in labor? Would you like to see capital projects? Start to be part of that process and take their input. And then when you give out the numbers, you can say, you remember when we talked about this? I thought about this and I thought this was a great way that we could do this. And here's plan A and here's plan B. Which one would you prefer? Now you've got a little bit more control over how that's going to play out, as opposed to just letting them say, this is what we're going to do. Gathering the facts. If they say they're anticipating a reduction in sales tax, research it. Understand exactly what it means and what that implication is going to be to your department. What percentage of the total budget is that? And what would a 10, 20% reduction look like? It just showed you how to do that math, and that's what we want to do, is we want to understand that so that we can be ahead of them in anticipating that. What would be the actual dollar impact, and what are the must-be-dones, and what can be deferred? I would have a list when you go into your budget meetings of the things that you have to get done this year or next year for next year's budget, and a list of things that you think, if there had to be cuts, that you think would be the least impactful to the town, and then try to justify those. Communicating the cost of deferred maintenance. I think this is very important in this particular time frame when we're looking at reduced revenue and potential cuts to highway departments. Is we all know, because you guys have attended David's classes at Cornell Local Roads, that there's a very real cost to not doing work. And you got to remember that your town board doesn't necessarily know that. Your elected officials are not necessarily people who understand the dynamics of that. And they just think, well, let's not pave these roads this year, and that'll save us money. Well, will it, or will it really cost us more money in the long run? And that's what you want to have yourself armed with, because you don't want to lose those really important projects. So having that master plan in place, knowing what your paving schedule looks like for a 5, 10, 15-year period is very important, and showing them what the impacts of holding off 1 year is going to be, because it's not going to be just this year. It's going to be years down the road that you'll be trying to recover from not doing some particular work. Using the Cornell Local Roads formula of the right process at the right time, estimate the financial costs of not doing certain work. I think in my experience, it's always easy to say we just won't seal roads, and we all know that that's probably the worst thing that we can do. Is obviously we want to keep the roads sealed. We want to keep our maintenance program going so that we don't do things that are going to cost us more down the road and see more damage in the future. Guy, did you have any experience with that?
You're muted, Guy.
Guy, you're muted.
Try again.
I've
You're good.
unmuted, Guy.
Now?
Yep, we can hear you now.
Okay. Okay. Yes, that's very true. You want to try to do, as you said, the right process at the right time. Not taking care of your roads may cost you a lot more in the long run. So don't do a knee-jerk reaction to just do the cuts that way. And while I'm talking, I guess I would say Tim has talked about the towns, but most of these concepts also are applicable to cities, villages, counties. If we have any of those folks that are listening in, it's the same thing. Just get your city budget, get your town or your county or village budget, and do the work that Tim outlined there. So they all copy it, just different ownership. So that's good, Tim.
Okay. Have options that will have fewer financial impacts down the road. And I've got some kind of a poll question about this is, what if you had to make cuts, what areas do you think would have the least impact on the future? If you had one thing had to wait, what would it be? Sealing a road, roadside mowing, ditching and drainage maintenance, hazard tree removal, or full reconstruction of a road? If you guys could, just in the question and answer pod, let us know what you think there. Which one would you prefer to see delayed if you had to make cuts?
And if I could jump in here, one of the things is, if this is something that has a relatively high dollar to it, you want to be able to have an explanation as to, okay, I've got to cut this, or we got to wait and not do this year. Here's the cost of doing that. So have that ace in your back pocket so that you can explain that to your board or even the taxpayers.
Yeah. Okay. I see there's we got 4 full reconstructions, and then 5 now, and then I see a few mowing could be put off, and then I saw 1 ditch work. And there's no right or wrong answer here. This is a question of having a productive conversation with your elected officials as to which one you think and they agree with can be put off. I don't think ditching is one of those things that really can be put off, because drainage is so important to our roads, getting that water away from them. So I think the drainage maintenance, all of the maintenance processes, in my opinion, I think if I had to do it, I would probably wait to do a full reconstruction and just make sure that you're maintaining your maintenance program. But like I say, there's no right or wrong answer. Do you agree with that?
I would do the same. I would do this. Yeah, I would do the same at the county level. Put that on hold and continue your maintenance. But like I say, just have an explanation ready as to that was what you had to cut and what ramifications can come out of that.
Mm-hmm. So planning for the future. So what does next year actually look like, and how are you going to start to get your arms around it? So we already talked about starting your budget early, and I think right now is a great time to start doing that. Start laying out multiple scenarios. Don't walk in and just say, here's my plan. Walk in and say, here's plan A, plan B, plan C, and work with your board to figure out what is the most acceptable plan. The boards really don't want to cut services to the residents. That's the last thing they want to do. But at the same time, they're faced with the other side of that, and that is not raising property taxes. So they're trying to figure out how to provide the best services without raising those property taxes. And if you can help them with that, it's going to go a long way at creating a good relationship with them. Work with your elected officials on those scenarios, and don't present, communicate. The other thing that I would strongly recommend when you're presenting this is something called zero-based budgeting. And the easiest way to describe that is when you go in and you ask for your SALT allocation for the year, your budget number. What most of us do is we take what we had last year and we add 2% or we add 5%. Well, it's really simple to just say, I don't know what last year was. What I do know is that I have 60 miles of road to maintain, and that I plow on average 143 times a year, and we put down 350 pounds of salt per lane mile. You do that math and you say, this is how much salt I have, and this is the budget number we need. Now, it may be way over what you've had in the past, but at least you're showing them justification for why you're asking for those numbers. And you can do that with every single line item in your budget, is to create the actual scenario as if you had nothing. You weren't starting from last year's budget. You were starting from no budget, and you had to build this budget. It's called zero-based budgeting. And when you do that, it really opens up your board members' eyes about, wow, this is a real struggle. You know, in my town, we had $600 a year for sign maintenance. And I really didn't have any argument. That's what was always in the budget, and that's what we got. Until we mapped out every single sign we had in the town and put a dollar value to it. And when we said we have $60,000 worth of signs on our highways, and the average lifespan is about 10 years, that means we need $6,000 a year. And they went, oh, we've been budgeting 600 when we really need 6,000. We can't get you to 6,000. We just can't do that, but we can get you to 2,000. And that's certainly a win. So it's not always going to go on the upside, but now you're having some very productive conversations about why you need that money. So I'd strongly recommend that you do that for each line in the budget. We have 2 more workshops coming up this fall, and we strongly encourage your input on them and how we can make them better for you, and any future budget webinars that you would like to see us do on budgeting. And if there's any questions, we'd be glad to answer those.
So this afternoon you heard from Guy and Tim on just sort of some quick things on setting up your budget. What they're talking about is this fall, we're planning to have a couple of workshops, one of our famous workbooks and all that fun stuff. Exact details, of course, obviously have to be worked out. But what we want to do now is want to give you some time to ask your questions about the budget. Put them in the Q&A pod. We'll answer as many of them as we can. We've got ourselves some time here. And we'll go ahead and do the one that was put in early here, Guy and Tim. They want to know, what can they use permanent improvement monies for? You know, the line item. What can they do with that money?
The capital improvement. I think you'd have to go back to your bookkeeper, your town board or county board for some guidance. In my particular case, anything with a life expectancy of 10 years or more, we were allowed to use that line. Otherwise, we didn't. So I think there's some policy that gets set in your own community about how they expect you to record that.
Guy, what would you be able to do with your funds for permanent? What's a permanent activity?
The same, anything with a anything with a 10-year life expectancy. If you're using CHIPS funds, those CHIPS guidelines are, there's some pretty specific guidelines that they put out. The state of New York puts out for the CHIPS guidelines, so tells you what you can and can't do with those. I know that one question that came up was, you know, is a double or triple surface treatment, does that qualify? And I guess I've been retired long enough. I guess my answer to that is make sure you look through the CHIPS guidelines to find out what the current information on that is.
So we've been talking about COVID, and everybody talks about the crisis of COVID, but in y'all's careers, do you have an example where you had to suddenly make a change because of either an emergency or a crash or something where your budget suddenly got thrown out of whack, and what'd you do?
Yes, in our particular case, we had a landslide. Had a heavy rain in the middle of the summer, and we had a road wash away, and we had to close the road. And what I did is that night, I actually contacted all of the town board, the supervisor, all the elected officials, explained what was going on. We held an emergency meeting, and I left it up to them. Do we want to try to find a solution? And I'm going to go out and try to present you 3 or 4 different options for repairing this, or do you want to close the road permanently? And it was a well-traveled road, but there was some serious consideration because we were looking at a very, very significant repair. Ultimately, we found a solution for around $200,000. the town decided to take money out of unexpended funds. They declared an emergency, transferred more money into the budget, and we went that way. So, you know, it's really starting as soon as the crisis happens and working with them about how you go about it.
And Guy, what about you at Allegheny County?
Oh, yeah, we had several. A lot of them happened when there was some type of a natural disaster, whether it was a flood, an ice storm, that type of thing. But Tim's spot on. You need to have good communication as to what you're going to do and what your plan is for getting things reopened, and have some good numbers as to what the cost is. We also had another one back in the 90s, I believe it was, and that was the entire county budget. We were in some tough times with our county budget, and I wasn't the superintendent then, but I do recall sitting in on meetings and what are we going to do, and it involved some people being laid off or positions being eliminated, but it goes back to that, having good communication with your board and with the people that are your fiscal people and your financial folks, if it's a bookkeeper or county treasurer, or just having those good communication lines open so that you can work your way through this and try to there's going to be impacts, but you try to minimize them as best you can. And that is achieved by having good communication to get through it, though.
Okay. I see Tim's anticipating the next question. May you please review the formula for calculating your department's percent of the town budget? So it looks like you're there. So go ahead.
So Caitlin, what I did is I took DA. Oops. Sorry, I touched my screen. So I took DA right here, 582,570, and DB. These are the two aggregate lines that constitute the highway department. And when you total them up, it's 1.774 million divided by 3.3 million, which is the total town expenditure. And then all you do is take the result and move the decimal place 2 points, and that comes up with your percentage of 53%. It's actually 53.7%, but we rounded. So that's how you do that. You just take your total expenditures for the highway, divide by the total expenditures for the town, move the decimal point 2 places.
Okay. And so the next question follows right on that. It says, when do you essentially create a new expenditure line item? What's the tipping point for breaking it out?
So it's a decision for your bookkeeper in your town, or your comptroller, your supervisor, whoever's doing your bookkeeping. There are some guidelines that are obviously the municipalities have to follow Gatsby rules for accounting, and the basic accounts are all created, and there's a book that you can get from the comptroller's office which gives you budget codes for that. But when you start breaking them out into the 0.00 or 0.01, 0.02, that is discretionary. That's totally up to your bookkeeper or your board as to how they want to track expenditures. So I would work with them on how they do it. My experience is the more sub-accounts you have, the more difficult it is to manage and manage consistently, because what you want to do is look at your expenditures from year to year to year. So if they're not being done consistently, it doesn't give you good data to go forward with.
Guy, what about the county level? What'd you do?
County level, we had full-time accountants on staff, even in our department. Most of the bigger departments had those as well. Believe me, those people were in contact constantly with our county treasurer and in her office. So you can, as Tim said, create additional accounts and break them out further. But you want to make sure you got somebody that knows what they're doing. The bookkeepers are definitely, you rely on them. And I used to say my fiscal manager was was my right-hand woman, because she definitely kept me on the straight path, because it was easy to be able to deviate from that if you didn't know what you were doing. But I was very thankful and had a great coworker that I worked with to do that. So
Our bookkeeper like candy.
Keep a good bookkeeper and keep him happy. Keep your
Yes.
bookkeeper and keep her happy. Him or her happy.
And just so you know, the main thing,
Yep.
we'll
I
talk
used
about
to
these
bring
line
her
items.
candy all the time.
We'll talk about these line items and those things in the full workshop when we get to it. The one thing I want to make sure we don't forget about is, even if it's a small number, you may need a line item if that's the only place you can spend it. So it may be a small number, but make sure you have that line item available. Like $600 doesn't sound like a lot for signs, but if it wasn't there, what would you spend? How would you buy signs? Even one? You may not be able to. So
Correct.
Yep. And the age old with the signs and budget line items, as most of us know, is that signs are supposed to be paid for out of the general fund. And most often they're not. They're taken out of highway funds somewhere. But there's actually a line item for them in general fund, and that's where they're supposed to come from.
for towns, yes.
Yes, for towns.
Someone is asking, can the slideshow be accessed? We don't normally show the slideshow. The recording will be available, but that's up to Tim and Guy if they want us to post the slideshow, not us.
Yeah, absolutely. I'd be glad to share it.
Any other?
Good.
Yep. Any other questions? We've got a few minutes if people have a question. Otherwise, we can let everybody have a little bit more time before the rains hit. I don't know what the rain's out. Have they got to you yet, Guy?
Oh yeah, it started raining right after lunch here.
Oh, okay. Well, again, we may be following up, whether it's with a webinar over the summer or in the fall with the workshops. We'll certainly be doing more on budgeting, just so you're all aware of it. And just so you know, I'm going to just, I'm stealing the screen from you, Guy and Tim.
Okay.
Next Monday, Tuesday, and Wednesday, we're doing 3 webinars. They're really just webinars, but we're calling it a virtual highway school, but really they're just webinars. One dealing with the town board communications. We're redoing the legal panel that we had done a couple of weeks ago. We had enough questions. And then we're doing a session on duties of the highway superintendent. And we got Jeff Griswold from Preble is going to help us with that. And Joel Kai is helping us with the board thing, and his supervisor, Mike. So you can sign up on our website. And let's see, last couple of items here. We got one person is 100% funded by sales tax. That's going to be a challenge for you.
Wow.
Yes, it is.
Yeah.
Wow.
So good luck.
Yikes.
Yep.
Yeah.
So if there's something we can help you
Hey,
with.
Dave.
Yeah.
Dave, I just was going to say that if any of the attendees on here questions or comments that they think of after they're done, they certainly can fire off an email or something like that, correct?
Yes, absolutely. Just send us an email. In fact, if you want to reshare, I think you have your
Okay.
address on the last slide of yours, Tim, or not?
No, I did not. I'm sorry.
Okay.
I should
Well,
have put
just
my
you can
email.
just send it to our email address, which is www. That's our website, clrp@cornell.edu. Just send us an email, and then we'll forward it on or answer it, get it answered for you. clrp@cornell.edu. And with that, I want to thank Guy and Tim for a nice, informative webinar on budget basics, and we will follow with everybody, and hopefully we'll see you next week. Talk to you soon. Bye-bye, y'all.
Thank you. Take care.
Bye.